Hey, it's the Jazz Takhar podcast, and I'm your host, Jazz Takhar. As you're driving around, taking your dog for a walk, or maybe part of your New Year's resolution is to run on the treadmill, whatever you're doing, do me a favor and make sure to subscribe to this podcast and share it with your friends. You guys are in for a treat today. I'm going to be talking about all my thoughts, tips, strategies around investing into real estate in 2021. In the last 5 years, we've seen a 50% total of 50% increase in price. That's 10% year over year. Now, there has been a dip in this current year of 2020, but all indication is that we've hit the bottom now. We've already started to see in the downtown core prices rebounding. And so if you were ever thinking or considering to either live in downtown Toronto in a condo or invest, now might be the time, because we don't have as many buyers looking. Why? Because it's a buyer's market. There's more inventory, there's more sellers on the market for sale, like they're actually selling their condos, then there's buyers looking. There's pros and cons to every type of investment. When it comes to specifically pre-construction, here's what can happen. The building might not get built. Projects get canceled. In the greater Toronto area, it's like less than 1%. I think it's like for every 100, there's probably like half a building. The projects hardly ever get canceled here in the greater Toronto area, especially when you're buying with a reputable builder. But you can buy into a project and the building doesn't get built. Now your money, your deposits are safe. Your deposits are safe. You're not going to have, you're going to get your money back. You would have lost the opportunity cost on that money though. What do I mean by that? Well, if you invested it somewhere else, you would have made a higher interest, okay? You would have made a higher return. So that, in my opinion, is the biggest con, the biggest disadvantage to this type of investment strategy. Second, there's still something else. The other thing is that for the first 3 years, 2.5, 3 years, from when you buy it to when the building gets built, there's actually no return other than what's on paper. So you can't rent it out because it's not built yet. There's no mortgage pay down because it's not built yet. What you are seeing, which on the flip side is a massive benefit, is the appreciation. When you flip homes, I mean, you're gonna get that quick cash, right? So you're gonna buy a home for $700,000, put in $100,000 worth of renovations, and then hope to sell it for $900,000, right? Or even more, $1 million. So in that equation, you're into it for $800,000. Let's just say you sold it for $1 million. That's $200,000 profit. Not obviously taking into consideration other expenses, but let's just talk top of the line, right? And so that excites people, and I understand that, right? You get that hit of instant gratification of cash, which is always nice. However, when you compare it to the buy and hold strategy, you just gotta have a little bit more patience, because if you hold on to it, it can continuously pay you. It's almost like an ATM, right? Because what's gonna happen is you're gonna buy something, you're gonna hold on to it, you're gonna have the renter pay down your mortgage and your expenses, and hopefully you're gonna have some appreciation. I mean, if you look back in the last 100 years, in the greater Toronto area, we've seen prices double every 10 years. So I think it's safe to say you're gonna get some appreciation. You're also able to continuously refinance that property. That's what I meant by saying that you can use it as an ATM. You can keep on going back. Once you have equity, you can go back to the lender, refinance money, and go buy more. See, the buy and hold strategy for me is really the only strategy. But you gotta see what floats your boat, so to speak. $75,000 to invest into real estate. What are some options? I'm gonna give you some pros and some cons as well. A, you can invest it into a mortgage, like a second mortgage. There's a lot of people who need help with their down payment. The pros of that is that it's very passive. There's nothing really to do. You go on title as on the deed, and your returns are gonna be anywhere from about 8 to 10%. To me, compared to the other places you can put it, that's probably something that you really need to consider. The other place that you can put the $75,000 is into like a land development deal. We have a lot of companies that we deal with as well. At any time, just shoot me a DM or a message if you want to be introduced to them. Land development deal, essentially you're partnering up with a developer, and you can also invest your RSPs in those type of investments. One of the pros is, again, very passive, higher returns. You're probably looking at anywhere from about 15 to 18% year over year, but it's a much longer term investment. What do I mean by that? Well, your money's tied up there for probably anywhere from 4 to 6 years, probably closer to the 6-year mark. Now, the third option is an income property. A little bit more work involved, not as passive. You got to deal with tenants. Sometimes you got to deal with a broken toilet, or a burner goes out. And obviously you got to make sure that it's rented because you don't want any vacancy. But the returns on an income property that we see here in the Greater Toronto Area and in most areas in the country, you're probably looking at closer to anywhere from 27 to 33% year over year. So now, those are the three options. You got to figure out what works best for you in your portfolio. The fact that you don't have to own where you live. What do I mean by that? If you look at a lot of the wealthy people in this world, you'll come to learn that not all of them actually own the property that they live in. What they do though is that they invest the rest of their savings, their capital, their income, but they don't mind renting where they actually live. Why? Because they've come to understand, and I hope you get value out of this as well, that your principal residence, the home that you live in, is actually a liability. It's not an asset. See, a liability is when something goes out of your pocket every single month. So when you own a home, especially where you live, you have a mortgage payment, you have property tax, you have maintenance fees, condo fees if it's a condo, but then you have all the utilities. Then you have the upkeep of the home or the condo. And so it's actually a liability. Now, if you're renting where you live, you have to make sure, in my opinion, that you invest the rest of your money. Have someone else pay all of those monthly obligations. That's how you're gonna create long-term wealth. And so if you can own, like there's also nothing wrong with owning where you live. I just don't want you to get caught up in all the hype. Look, I'm a real estate broker. I have a vested interest if you actually buy more properties, right? And you'll hear a lot of people in the industry, you don't pay rent, you have to own where you live. Again, in my opinion, just from the people that I've studied over the last 25 years, they don't. The uber wealthy, the uber rich, they don't. So why don't you just reverse engineer what somebody's already done very, very well? So strongly consider renting where you live, so you don't have to pay all those upkeep costs, the condo fees, the property tax, and the closing costs as well. And then just make sure though, if you don't do the second part, then forget everything that I just mentioned in this video. The second part being that you have to invest the money. And I do think that real estate is one of the best investments you can make ever. But the best investment, in my opinion, is investing in yourself. So as an investor, when you're thinking about making an investment into any opportunity, it just doesn't come to real estate. But if somebody comes to you and says, hey, I got a great investment opportunity for you in my business, in a joint venture deal, I want you to always ask these 4 questions. And big shout out to my boy Rav Tour, who taught me this long time ago. And if you haven't checked out his show, you should check out his show, Everyday Investor. But these are the 4 things that I always want you to ask yourself. 1, what is the investment? Like, how much am I investing? Number 2, when am I going to get my return? So when am I going to get my interest on the investment I made? How much is the return? So is it a 10% return? Is it 30% return? And then number 4, what are the risks involved? Because if anyone ever tells you that it's fully guaranteed, you have nothing to worry about, that's when I want you to worry. So 4 things again, really quickly. What is the investment in terms of how much is, what's the dollar amount? What's going to be my return? 10%, 20%, 30%. When do I get it back? And then what are the risks involved?
This next tip truly is what I've noticed in the last 15 years is the difference maker between an investor who now is making residual income in the hundreds of thousands compared to somebody who's not. They picked one strategy at the start. They didn't fall into paralysis by analysis. Just take action, because here's one of the coolest things with investing in real estate. It is the most forgiving investment known to man, in my opinion. Why? Because you've noticed, and I love your logo that I see, it's that house with an arrow upwards. The trajectory of real estate values has only done one thing in 100 years. It's gone up. It goes up, it comes down a little, goes back up, it goes up and down, upwards. That's just what happens with investing in real estate. So it's very forgiving, as long as, tip number 3, that you have the mindset that it's long-term. So if you're getting into investing into real estate because you saw a show on HGTV, and a lot of them are my friends, and you think that you can redo a home in 22 minutes, I got something coming to you. Like that's not how it works. Not only don't it takes months, but these guys are experts. These girls are experts at what they do. They have a crew around them that will blow your mind. You don't see them behind the scenes. So it's not something that's easy to do, to buy a house, redo it, like tear it down and rebuild it, or do renovations, even add an income suite. It's not easy. Okay, so these guys and girls are experts at what they do. I want you to understand that you have to think of real estate as a long-term wealth creation vehicle, not a get-rich-quick investment. There's just not a lot of them out there in terms of investing in real estate, but if you have that mindset that it's long-term, you'll always win, as long as you hold on to your real estate.
Investors are generally making the same mistake over and over again. And there's like a top 3, top 4. One is that they get very emotional about the property they're looking at. So for example, they'll walk up, park their car, walk up to the house and look at the curb appeal and the fact that there's such nice landscaping, or the countertops and the cabinets are so nice, or that wallpaper is beautiful in the house. See, you want to make sure that you're not getting emotional about the property / investment. And what you want to do, and the second mistake I'm seeing, is they're not running the numbers properly. Like, there's obviously the expenses. We're going to look at mortgage payment, maintenance fees, property taxes, insurance fees, property management if we need to hire a property management. And I always see people underestimate the expenses and overestimate the rents. I like to go the other way around. Underestimate, be very ultra conservative when you're running the rents and the income, and overestimate your expenses, because we all know, right? Like, things cost more. A lot of people don't hold a slush fund, meaning like an emergency bank account. If something goes wrong, you need to make sure that you have money put away for vacancies, repairs. And so the second biggest mistake I see investors make is just not running the numbers properly. The third thing is they're not asking the question when an investment opportunity comes their way, is what is going to be my possible exit strategy? So I'm putting down $100,000 in this investment. When am I going to get my return? Obviously, what is going to be my return is a question every investor will ask. Like, what's the return going to be? But when am I going to get it? Because and how am I going to get it? Is it going to be through a refi? Am I going to sell this property? And you want to make sure, like even with pre-construction, are you going to sell it before the building gets built? After? So you got to ask not only what is my return, but how am I going to get my return? And then the fourth thing, it's like anything else in life, most people just don't take action. How many times have you heard, and now I'm probably at hundreds of thousands of times, I wish I bought it. Or even worse, I wish I kept the property because now it's quadrupled in value. And so the biggest mistake I see people make is that they just never take action. Don't let that happen to you.
Yeah, values have gone down, not plummeted. Yes, there is vacancy rates are a little above 2.3, 2.4% right now as of December 10th. You're looking at about 2.3, 2.5%. We were used to seeing pre-COVID almost a negative vacancy rate. What do I mean by that? There were so many multiple offers happening on rentals, not only when people were buying places, but actually on rentals. But my answer to him is not to panic. Don't panic, guys. Do not sell your real estate unless you have to. I am begging you, imploring you, like whatever. Don't sell your real estate. Values are gonna go back up again. In fact, with the news of a vaccine coming now, like we're already seeing consumer confidence increase. And so I personally think that the second half of 2021, we are going to go into an epidemic here, meaning that the supply is going to be a lot lower than the demand once the borders open up again. See, you guys have heard me say this 1,000 times. We have more people coming into the GTA than we actually have real estate, to the tune of 3.3 million people in the next 10 years. So if you have to sell, you need the cash, and you have no choice because you're strapped right now and you're going through financial hardship. Different story. Okay, let's talk about perhaps selling. But if you're just worried because of what you're reading in the headlines and this little blip that we're seeing, and it's just that it's a little blip, and 10 years from now we're hardly even going to notice it on the graph. So just hold on to your real estate, don't panic, and make sure that you read more than just the headlines.
That you said that, as people and investors, and we see it all the time, they're scared. And what we like to say a lot is everyone was scared till they do it. How do you guys help people get over that hump, that obstacle, to get them to take that leap of faith?
I think it's the education.
Yeah.
To your point, that we just
mitigates risk, eh?
We don't make the decision for them. We're like, look, guys, we're just going to explain to you what we've seen and what we've seen other people do, and like current day stuff, not like what we've seen 20 years ago. This is how this some no money down thing works. It's a whole different world. And then if you educate people enough, the people that really want to do it, they're going to move forward anyways. So it doesn't have to be this like. There's no hard sell or trying to really convince people like you really need to be doing this. It's just like, look, here's what we've seen. Here's the track record over this period of time. Maybe you want to do it if you have the information, maybe you don't. So that's kind of, it's almost selfishly that we lead with so much education, even from the clients we work with. We have all these classes we give and stuff, is because it just makes it their decision. It doesn't make it us having to sell them.
I love that you said that, because Laura, what was it, 9-10 months ago, almost a year ago now, actually, September already of the time of this recording, you took your first action step in investing.
Shitless a little bit, yeah. Awesome. I own my house, but I've been working with real investors here for 3 years, and I'd been helping people purchase, and they would ask me, well, were you nervous when you first bought yours? And I would kind of say, I haven't really done it. So to advise people on doing something, even though I had the same education, it wasn't until I took that next step myself that now I can really speak to them from the emotional point of view, like what it feels like to take that next step and write those checks out, and like all your hard-earned money. But then you see how it grows and compounds, and you're right. I've made more money just off that alone than certainly anything I would have done otherwise. So it's been great.
And tax-free.
Well,
that's always
so
nice,
far, yeah.
Right? Like the legal way not to pay tax.
Exactly.
Right? Our podcast really circles around entrepreneurs and real estate investors and people, guys and gals in leadership roles are looking into getting into leadership roles. Another cool thing with you guys is that you're real estate investors, but you're also entrepreneurs. Do you guys see a lot of crossover between the two?
Totally. Yeah, for sure.
And for probably sure. Personally in your lives, it was a lot of maybe fear, just not being able to take action. Elaborate on that a little bit for me, man.
I think, like real estate, when you get into business, when I quit I was in the corporate world. Okay. My wife was at home, 2 kids, mortgage on the house, quit my job to start working with Nick to build Rockstar Real Estate. Second month in, we lost on 9 deals in a row that we were working with investors. Okay. And we looked at each other saying, if we don't make some money soon, this is gonna fail.
We're gonna be like the other company.
It's a problem.
Yeah. So
we didn't have a good photocopier, so that
yeah. We were like carbon
we bootstrapped,
paper.
We bootstrapped hard, man.
Yeah. All the money, for years went back into the business. I think people, when you work with investors, people were looking at us like, hey, you guys have owned real estate quite some time now. Right. Now you're working with investors. You guys must be rich.
Yes.
And they didn't realize at one point, Nick and I were sharing a car. because I had the nice Acura, he had the Honda Civic.
Yeah.
So when we were taking investors out, we would say, hey, he would call me at one point saying, Tom, bring the Acura to the office because I got to take somebody on the road to make a deal. I don't want to go out in the Honda Civic.
Yeah.
I would drop off the Acura, and one guy I'll never forget, I took the same guy out like that weekend, and he got in my car. He's like, you guys are so nice. You're brothers and you drive the same car.
Same color.
Exact same car.
Oh, yeah,
You know,
I
they
know.
thought we had
Yeah.
two cars exactly the same, but it was us sharing one car. So
that's
in
so
business, when you're starting, we didn't realize how much of the money just pours back in to build the business.
Right,
Like you're
right.
feeding this thing.
Yes.
So you're facing a fear like real estate. You're facing fears every day, and it's an endless journey. Like it still hasn't stopped for us. Like 12 years later.
I mean, you guys know you deal with challenges every day, right? You never go.
Firefighters more than anything
Yeah.
else.
Oh,
And
yeah.
like we know who the real heroes are, which are firefighters. And I'm not saying that's who we are, but we're always putting out fires here, right? In
Anytime-
client service business.
Problems nonstop.
Anytime something goes smooth for too long, we look at each other like,
paranoid.
oh my God,
Something's coming. Some race for
this is
it.
gonna be-
Race for
This is
it.
gonna be bad, man, because
Yeah.
it's been a while.
Yeah,
it's
like
gonna
if
be
it's
a
2
nasty
weeks
one.
where everything's kind of going good, we're just like literally holy shit. I don't know if I'm allowed to swear or not on here. Like there's a holy shit. Like what the hell is gonna happen right now, you know?
Share this with a friend, a neighbor, or a colleague. Appreciate every single one of you guys. Happy New Year and love from Jazz.